It's really exciting to have you here. Thanks a lot for joining me today. This is a tough topic, I've got to say. Actually, when I first read the title, I kind of pained my heart a little bit. So let me get started with a question to all of you. Who is winning, neobanks or traditional banks?
It's a good question we can debate about for hours. I feel the answer is mixed, really. It depends on where you are. Overall, you see neobanks are setting the benchmark. They're biting the bank's lunch, as they say, bit by bit, taking the market share. At the other end, not every bank, neobank, is successful, able to sustain themselves. So it depends where you are. Overall, I think the client is winning because neobanks are just driving the market forward. And then it depends per market, I would say.
Yeah, I would say that actually banks are winning, but just because neobanks are becoming old banks. You talk, in your opening talk, you talk about Nubank. That Nubank, okay, it's a neobank, but what does it mean? It's a neobank because it's digital. It gives the same service to the people. So in that sense, banks are winning because the winning neobanks are becoming traditional banks.
Yeah, it's kind of like that. So neobanks actually pushed traditional banks to become more digital, and now they're kind of converting. So there's not like direct border between being a neobank or a traditional bank. And in that sense, still balances are kept within traditional banks, and so yeah, I would also bet for that. Banks are kind of winning, but they're becoming more digital. So it's not that old is winning over the new one, but rather old is becoming the new one.
Sorry, no, maybe the concept of digital, of neobank is winning, but not the neobank itself. That's my point.
Yeah.
So venture capital is becoming more and more expensive and also more scarce. What does this mean for new banks and potentially also larger digital banks?
So when the neobanking era started, so there were a lot of actually cheap VC money like flowing in, helping them getting marketing, getting more and more customers. So they were like bragging about how many like monthly active users I do have in my app. So then things changed. So now it's more about actually profitability and how do you squeeze money from the customers they have. So that's why you should not care just about the customer acquisition cost, but also what's the revenue behind. And it pushes them like thinking more and more about the like tiny parts of like cost and revenues. So,
yeah, I think that it's the end of the vanity metrics, you know, because there were like many neobanks that says, okay, yeah, we are successful. We have like 10 million accounts, but they don't make a penny out of them. And also many of those accounts, they never even make a transaction, or they just make one transaction for opening the account, and they count it as an asset. And that is kind of crazy. I think that there is an opportunity for players in the industry that they are really playing the game. They are really making changes and making money and being sustainable with their offerings.
Yeah, it's sort of a reality check, right, for the neobanks. And before it was really sky's the limit and really based on your number of customers and also seeing those metrics, basically subsidizing your customers, just losing more money the more customers you have. And now it's more putting the focus back on, are you actually making money? Are you actually, in that sense, contributing value to the customer and have a sustainable business model? So in that sense, I think it's a healthy model, just separates the strong from the weaker ones.
So many new banks have announced that they're now focusing on profitability. What are common strategies to basically move towards profitability?
So, like majority, so I saw that something below 5% of the neobanks are actually profitable, and still majority of them are kind of making transactional business. So just few of them have a like proper banking license. They're issuing loans, but majority doing transactional business. So, and what we see here at Torus that many of them are not very into the detailed analysis of the data they have with regards to transactional profitability, but still they're just assuming that their interchange revenues are covering the costs that they have, especially on the costs related to the scheme fees like paid to Visa, MasterCard. And this actually could be one of the opportunities for them to look into more detailed way and to really squeeze the margins out of there. On the other side, again, many neobanks were based on like BaaS rails, and many of them just don't have access to the data to analyze it. So that's also another like part of the coin.
I think that there is an opportunity for this, what called, wannabe fintech, the players outside the market that wants to provide financial services to their customers, because they merge their own business with the financial businesses, so they are not even want to get money out of the financial services. If they are even, they are okay, because they are getting data, getting more engagement with their customers and stuff like that. And they became neobanks, but not in the sense of the startups neobanks. And I think that there is a balance between making money out of the financial systems, being a neobank, and being sustainable at the same time. So I think that there is a niche there.
Yeah, adding to what the two gentlemen before me said, where to make money in neobanking, and I think it all depends. Typically, you would, or people argue in the industry, okay, interchange that's not sustainable, at least not in European markets. So you want to go to lending, particularly SME lending, often cited. Foreign exchange, very profitable segment, and then you see many players also trying out subscription-based models, which some have reasonable success in that. I think it all depends, and in a nutshell, it's just okay, based on who you are and what market you're in. For some, it may be the holy grail into payment accounts and charging payment fees, and for others, it's indeed in remittance. So it depends per market. Africa is much different from North America as well as Europe.
Kirill, you mentioned that 95% of all neobanks are not profitable. Do you have an example, or a particularly good example, of the 5% that's are particularly good in becoming profitable?
So I guess already, so you actually mentioned neobanks, so they are actually one of the good examples. So they're growing profitable. I believe Revolut might have reported that at some point of time they get some like profitable at least quarters. So, but they are getting into that, and again they're expanding their product line. So that was initially the strategy for them. But yeah, probably these are just a few, and there's still even pretty grown neobanks which are right now just switching into direct relationship with the regulator, direct relationship with the schemes, and it will like help them to exclude the intermediate, and again probably improve the cost basis a little bit.
And are there any particular neobanks that we should be watching that are not profitable yet, but are particularly good in setting measures towards profitability?
It's hard to say for me right now, so probably, yeah. But
yeah, but personally, I'm always a fan of those neobanks that make a real impact to customers. You really highlighted in your presentation, M-Pesa of Kenya, obviously. With big uptake in the markets. I'm European, well-established markets, but in the past was living abroad. I've been using TransferWise, and that's for me a great example, for me very useful. And there are similar examples of who are successful. What you see out there for the new players, I think it's more sort of in the super app play, either in Asia or also in Africa. You have the likes of OPay, whether they're profitable yet or not, I don't know exactly for all, but I think that's where interesting things are happening.
We were talking about that it's VC money is becoming more scarce. It's overall becoming more difficult to essentially start a neobank. Does this mean that the era of new neobanks is over, and will basically just the neobanks that are currently already around and have reached a certain scale, those ones will be dominating the future? So is it basically, should we expect that no new neobanks will emerge in future?
No, I wouldn't say that. I still would keep an eye to the companies that they already have an ecosystem and they want to expand their businesses. There is a good example. In Latin America, there is a company called Mercado Libre that is a kind of Amazon from Latin America, but it's huge. And
Sorry, you said Mercado Libre?
Mercado Libre, yeah. And they started providing banking services without being a bank. And they are becoming a bank without a license, and it's one of the biggest company in Latin America. And so they are a neobank, but they build their bank from their ecosystem. So first they have the customers, the providers, the logistics and stuff like that. And now they give virtual accounts, wallets, loans, stuff like that. So I would just change the focus.
Yeah, and probably also historically, so neobanks were like opening in like more developed countries like United States, UK, EU. And then, so the competition here is already pretty tough. So that's why there's still opportunities in emerging markets for them to develop, but rather in the developed ones, probably there's some either very niche things. But again, there's the question, can you be large enough within this niche to justify that you're building the whole banking business there?
Yeah, I largely agree with what was said already. In a nutshell, I think in North America, Europe, that wave of neobanks is over, I think. You don't see the same influx of new players anymore, but again, emerging markets, still ample opportunities, and there it's just about to start. Will there be no neobanks? I think there's always the opportunity to do something new and better. The market is always evolving, but I think the opportunities are more in select niches and perhaps coming in less of a wave and more like, more drip feeding into the market.
Another question probably is, what for do you need to be a neobank in the end? So do you want to just earn some transactional revenues? Do you want to earn on having the balances? Or do you want to get the data? So and there are like different questions you need to ask first probably before actually thinking of starting a neobank.
How do the challenges of neobanks differ across countries? And maybe also the opportunities?
Yeah, so yesterday we had or before we had an interesting chat, right? We are all familiar with the big names, the likes of N26, Revolut. But when you go to some African markets where we're doing some work, just the whole financial infrastructure is not present in the markets. So this whole concept of building a digital bank requires really to build something from the ground up. So those are challenges you don't see elsewhere. But again, if you get it right, the opportunity is huge versus in mature markets, you really need to scratch the surface for the opportunity.
Yeah, I think that the opportunity also is there is a guy called Bob Johansen that says that everything that could be distributed would be distributed. And I think that the neobanking as a concept is a whole bunch of services that should be distributed. I don't get why there is one single player that gets all the services. I think that all the services can be given by different companies, different players, and of course that there are people or companies that concentrates the whole bunch of services. I think that also this idea of one company taking all the responsibility of the bank will be old-fashioned in the next few years.
I think you see a mix. In one end, I agree with the sort of trend of sort of all-encompassing fintech apps and where you do everything and it's sort of open regardless of where you have your actual accounts. So sort of the aggregator role and the likes of what the big techs are doing, particularly in Asia, you see that. At the other end, also you see the opposite movement, right? That it's so easy to open those accounts, so the hurdle of having multiple accounts for this and that is less. So then you end up just having 10 different fintech apps on your mobile and you switch easily. So I think you see both movements, I think.
Yeah, but maybe what I see is like kind of a Lego game, you know, where there are many these Lego pieces there, and probably one aggregates them, but the Lego games are the Lego pieces are independent, and that's my I don't know I think that's the way neobank is heading.
Do you feel that there's a threshold which is required for a neobank in order to become profitable? Like, for example, number of users or type of products that they are offering?
I don't think it's kind of a fixed one. Still, so there are some thresholds depending on what type of business you're in order to get, for example, like, will it be worth having a direct banking license, or will it be worth having a direct connection to Visa, MasterCard? So usually it's still at least some like couple of hundreds of thousands of customers if we talk about B2C banking. But still they might be different because you might be in a certain niche where you're like your revenues are higher. And so yeah, that's why you might go with a lower number, or if we into like B2B stuff, then the story is a little bit more different, definitely.
I think there's a threshold, but it depends on the type of service you offer and where you operate. It all relates to what's the cost to build the bank, and then the profit you can make per customer. If you do regular payment accounts, fin margin in mature markets, well, maybe you need like 1 million customers to make the model work. In other cases, you can easily launch a neobank-like proposition for a few million euro and very profitable cases of clients. There are also examples of neobanks that have a few thousand customers and already are able to make it work. So it depends. It depends on your business.
Yeah, I agree with that. It depends on the business, and it depends on the geography. It's really different on developed countries or regions like Europe or the States, and compared with, I don't know, Latin America or Africa. The metrics are really different there.
So I'm actually currently, I mean, obviously I've been in digital banking in Europe, and Europe is a very straightforward market because it's a very large market, more than 500 million people. I'm personally actually working currently on building the first digital bank in Egypt. Again, very straightforward market with more than 100 million people. But I've spoken with a founder that wants to build a new bank in Kosovo, a country with less than 1 million people. How would you start such a topic? How do you make a bank, a digital bank, in a regulated market that essentially issues a license? Well, you need a license only for this market, and it's a very small market. How do you even start a digital bank in such a small market?
I guess there should be some kind of a reason that they at least did some market research before that. So I don't know if there are all incumbent banks that are in the market. I don't know. They still don't do, for example, something that we're get used to with like having the ability to issue a card from your app or something like that, and then they might see the opportunity. Still, I guess, even a pretty small market, so there might be some specific use cases which can be bringing money into it. At the same time, probably it might be worth like testing it on like bus rails because it's super fast to launch. You can really do an MVP, test it for a few months, and then you can switch it. And for the end customer, it will be almost seamless because they will just sign another, like I believe Revolut did the same. When they got a direct license in Lithuania back in the days, they just sent some letter to the customer saying you need to consent this, and that's it. So, and then you as an end user, you just do not know that they switched from bus rails to a direct connection.
Well, I think that at the end of the day, the regulations are almost the same in all the countries. You don't have like many difference between, I mean, Occidental countries. I would say like Europe and America, and the American continent. the normatives are not that different. So when you start a business in any of the countries, I know, I'm from Argentina, you start a business in Argentina, and probably the same regulation applies to all Latin America. And you can start in small countries, like Argentina. It's not small in the geography, but we are 40 million. I mean, it's not a big market. And you use it as an MVP. Then you scale to Brazil easily.
I mean, I have to say, even the regulation between Germany and Austria, two very similar markets, are incredibly different if you go into depth. That's why, and by the way, I'd be very curious how the regulation differs between Cyprus and Greece. Maybe someone can tell me later on. But that's actually one of the big challenges that I see in small markets. How do you basically even start a digital bank in a small market? Because I almost feel that small markets are excluded from some part of the innovation because it's so difficult to make a business case for only this one country work. Would you agree on that, or have you seen examples where this works?
It depends on the regulator and to what extent they are open to new innovation, to what extent are they open to collaborate with you. If you want to enter new markets, it comes down to being proactive and also educating the regulator. You shared your experience that I can resonate with. At the other end, the smaller the market, you need to be economical how you enter. So then leverage existing solutions from other markets. That's typically the way to go. But again, you need to have the conversation with the regulator to make it work.
Do you know examples of neobanks that are being founded not by young founders but by corporates? And maybe I'll start with you, Alejandro, because I know that you've been working with a pretty exciting example.
Yes, well, one already in the business is Mercado Libre, as I said. But we are working with some big companies that want to become banks. For instance, my company was invested by Coca-Cola company, and they say they want to become a bank for their merchants in Latin America. They have 6 million point of sales, so they have 6 million merchants that it's their target for their banks, and they really know what they need. Banks usually, I mean traditional banks, they have one product that fits all, and fits nobody at the same time. So the hypothesis of the Coca-Colas of the world is that they really know the needs of these people for giving accounts, loans, and stuff like that. And it's really interesting. I mean, it's ongoing. We don't know how it will end. We hope that it ends good.
And may I ask, how does a corporate like Coca-Cola prepare to become a bank and also adhere to bank compliance standards?
Well, they are doing that because one of the main reasons is that these corporations are very intermediate. You know, they know the merchants, but they don't really know them because they have bottlers, distributors, and stuff like that, and they want the hot data of the point of sale. Understanding how they transact, how they collect payments, how they it's a huge asset for them. It's not only because they want to provide financial services, but it's also because they want to take first-party data, and I think that's where the business is.
I have less good of an experience with corporates setting up digital banks, particularly in European markets, particularly from banks. You see always with the culture, it gets influenced by the big, slow, risk-averse traditional bank. So I'm not a fan of such setup, but you see the successful cases more in other regions, right? Kakao Pay, one of the most successful ones. You have Torus as well, also related to one of the local tech companies. We know WeChat, Alipay, and their financial services. So they are successful, and it has to do also with sort of the culture of the mothership, basically, if they themselves are innovative. So then in that sense, making an example, I would see more Google or Apple with your presentation as well, the big techs, in a better position to actually launch a new innovative player as opposed to one of the old traditional banks.
And also they need to have quite a large motivation to that. I have the opposite case back from my consulting past, that we're helping an airline to become a bank because they want to additionally monetize their loyalty program that they have and to manage the miles better. But in the end, they couldn't overcome the fear to get into pretty totally new space. So they put all the consultant deliverables on the shelf for a better future.
I mean, we all read the story of the Goldman Sachs-Apple partnership failing. Could you imagine at some point, I mean, Apple now will start a new partnership with a new bank, maybe it fails again. Could you imagine Apple applying for their own banking charter?
I think Apple's in a difficult position because they want to be a few things at the same time. On the one hand, they want to be the platform for banks and they don't want to compete. And on the other hand, also, they had this partnership. So I think that's for me the main question. If they were standalone, not worried about cannibalizing the other relations, I think that would be in a great position and do it the Apple way. But that's for me the question mark, really.
I believe that corporations want to give this or providing these financial services, but without being a bank, really. So that's why there is an opportunity for companies that are white label and provide all the services, all the data, but they, with this, they avoid filing for a bank license and stuff like that. So they want to be, in the front of the services, but not the back of the services. That's why I think that this Lego game makes sense, because these companies can integrate different services, but without being them who provides the real service.
And then it's the question of who owns the end mile, the last mile. So who owns the customer relations, who owns the data, who owns the revenues. And then there may be different balances between those.
Let's talk a little bit more about profitability of neobanks. Can you share your perspective in how basically striving towards profitability in banks differs towards other companies, and what are potentially some misconceptions when people think about profitability in neobanks?
I think that so on the one hand, there is an assumption that neobanks should be pretty much cost efficient and operationally efficient. Again, for not all of them act like that, and also if they were built to just grow as fast as possible, then some point of time, non-transactional costs are also become pretty large, and the fixed one as well. From the transactional perspective, so we truly believe that they are sitting on the pile of data they're not analyzing right now. And by doing the analysis better, much better, they might significantly improve their profitability by double digit, sometimes even triple digit. But it just needs to be very specifically care about.
I don't have an answer. I have a thing that I feel is all the as a service models are quite tricky, because when they start scaling, the cost scales sometimes faster, and I think that this is a challenge for all the finance services, because we are all coming as a service, and when you start plugging services and services and services, then you do the math and you're losing money easily. I don't know how will it converge in the future, but I think that for sure it's a challenge for us.
Yeah, I think a lot has been said already, and also we talked about the areas in which they can possibly be profitable. if you zoom out, neobanks came from the mindset of doing something new, something different, hence the name, also stemming from the financial crisis, want to do something better. Also want to be more cost efficient, at least to the customers, giving your services away, and trying something new as well, how you make money. But yeah, banking works in a certain way, and in certain ways where you can make money. So I think that's what neobanks also should follow, more the traditional ways like lending, payments, etc., and look at their pricing amongst others.
So one challenge for neobanks is, of course, they can not only focus on profitability, but also have to manage risk management and compliance. How do you balance profitability versus risk management and versus regulatory compliance?
I think that it's all the same at the end, because you have no choice. Yeah, I mean, you have to be profitable, you have to low or manage the risk, and you have to comply to be compliant. So it's not a choice. It's all part of the cost.
But at the same time, probably so they're it kind of risk and return. So like neobanks potentially should be a little bit more risky in terms of like the ability to take risk on them, because otherwise they're playing in the same field, and again, then the margins are then the slim, so they're fighting for the same pie.
I agree broadly what was said. It needs to be all in balance. It's just a matter of a mature company that you do it in the right perspective. And of course, you can be more aggressive with your pricing, take more risk as well. But you need to balance to avoid the potential downturn and all the risk with it.
Perfect. Let me, two last questions. First of all, in what way does actually regulation influence profitability? And potentially, can neobanks leverage regulation, or let's say new regulatory requirements towards profitability?
It's a good and broad question. I think overall regulation just ups all the costs, like big burdens for banks. Particularly also for new entrants, it just makes it more costly to enter. So that protects actually the incumbents. How to leverage is really focus on certain areas and do that better and more efficient, and just be the powerhouse for one area, I would say.
Well, I believe that governments should help with this, because sometimes it's like a regulatory hell that you have to complain with so many, like legacy stupid things, that they should be like clean up from scratch and build it again for new banking services. That would help with the profitability and the evolution of the industry.
I guess it was touched a little bit in the previous panel that there are already some kind of regulation like sandboxes for that. Plus, there might be some different subsets of regulation for when you're kind of limiting the risk, but still you're making it easier for new players to come in.
Let's hear one last statement from all of you. What will the next couple of years bring for neobanks?
I think, depending on where you are, it's just the maturity of the neobanks. I didn't think all will survive, but the ones that will come out stronger. And at the same time, still new markets, you see strong growth of that. That's broadly the picture, I would say.
My bet is neobanks to become industry experts, and not a neobank who wants to have 2-3 billion people in their bank. So it's like industry.
I think that they will keep on kind of merging a little bit with the traditional banks, because just having a nice UI is not enough these days. And they also, at the same time, so the growing competition will push them to really become more efficient and more profitable, but they will kind of, the banking industry itself will be kind of merging with the neobanking. So there won't be a separate segment anymore in some couple of years.
So is the era of neobanks really ending, or what basically is actually changing?
I think that the era of neobanks, when you were like distinguishing in the market just because you have a nice app and you make your customers to issue a card within one day, that will be the ending. But there potentially might be some new things coming also from those regulatory sandboxes. So.
And maybe to add my sense to it, the final conclusion, I think it's not ending, it's here to stay, and neobanking will always be there, but perhaps it's less of a wave. It's more like continuous influx of new players, and that will happen anytime, any day, I would say.
I would say that it's not ending, it's continuing differently, but it's always evolving. I don't believe that it will be like from now to tomorrow it will be neobanks or neobanks. I mean, it's always changing. It's an evolution process.
Perfect. Thanks so much. I really enjoyed the conversation, and I'm looking forward to speaking later on. Thank you.
Likewise. Thank you.
Thank you very much. Thank you, gentlemen.